Good morning, folks. My name is Brian Baker, Director of Rail and Logistics at PFL. We hope that everyone had a great weekend. The Dow closed lower on Friday of last week, down 981.18 points, closing out the week at 32,977.21 points, down 834.19 points week over week. The S&P 500 closed lower on Friday of last week, down 155.57 points, and closed out the week at 4,131.93 points, down 139.85 points week over week. The Nasdaq closed lower on Friday of last week, down 536.89 points, and closed out the week at 12,334.64 points, down 504.65 points week over week. In overnight trading, Dow futures traded higher and are expected to open up this morning 170 points. Oil prices traded down on Friday of last week after initially trading higher earlier in the session in a volatile day. Heating oil prices plummeted on Friday of last week into expiration of the front month contract, dropping as much as 20% at one point. The heating oil contract expired on Friday along with the global Brent benchmark and U.S. gasoline futures. Volumes in all three front month contracts were low, creating outsized volatility in the market and leading to late day sell-offs. Analysts said the fireworks were all in the expiring diesel contract, said Andrew Lippo of Lippo Oil Associates in Houston. Friday's expiry was especially volatile and may not be reflective of actual tightness. Prices closed out the week up slightly, mostly on prospects of a Russian oil embargo by the EU and the result that could have on Russian production. WTI traded down 0.67 or to close at 104.69, up $2.94 per barrel week over week. U.S. commercial crude oil inventories increased by 700,000 barrels week over week. At 414.4 million barrels, U.S. crude oil inventories are 16% below the 5-year average for this time of year. Distillate fuel inventories decreased by 1.4 million barrels week over week and are 21% below the 5-year average for this time of year. Propane-propylene inventories increased by 2.2 million barrels week over week and are 12% below the 5-year average for this time of year. Propane prices were flat at $1.31 per gallon week over week, but up 56 cents per gallon year over year. Oil is lower in overnight trading, and WTI is poised to open up down $3.24 per barrel from Friday's close. Total North American rail volumes were down 5.8% year over year in week 16, resulting in quarter-to-date volumes that are down 4.8% year over year, and year-to-date volumes that are down 4% year over year. 9 of the AAR's 11 major traffic categories posted year-over-year declines, with the largest decreases coming from intermodal, 7.8%, and grain, 13.3%. The largest increase came from motor vehicles and parts at 17.2%. North American rig count was flat week over week. U.S. rig count was up by 3 rigs week over week and up by 258 rigs year over year. The U.S. currently has 698 active rigs. Canada's rig count was down 6 rigs week over week and up by 44 rigs year over year. Canada's overall rig count is 95 active rigs. Overall, year over year, we are up 302 rigs collectively. We are keeping an eye on the STB meetings. Well, folks, a lot to unpack here. The crux of the meetings has ultimately been precision scheduled railroading. Designed to improve efficiency and reduce costs, PSR is now being blamed for the significant service delays. This, along with the shortage of crews or available personnel, is causing the largest supply chain issue we have ever seen. Pete Buttigieg opened the meeting the first time someone in his position has personally come before the STB in 20 years. Major shippers from a wide range of industries appeared at the hearing to bash the railroads, claiming their poor service is not just hurting their industries, but the overall economy. The railroads, for their part, unanimously admitted that the current level of service is unacceptable. They took exception to blame PSR and other cost-cutting measures, and instead blamed the unprecedented nature of the pandemic, which caused major swings in demand as well as supply chain bottlenecks such as congestion at ports. The reading of PFL's Rail Report today is an absolute must. Not only do we dive into more detail as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers. Bottom line, a lot of great information and a lot of fancy graphs. We hope that you enjoy reading PFL's Rail Report today. We do it all for you folks. PFL has been extremely active in railcar storage, return on lease strategy, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885.